the banks getting bigger, they will be able to invest in technology. They will have the capital to invest technology, right?
Technology has enabled banks to understand better where the buying centers are, what their requirements are. So it's just a fascinating world.
My name is James King. I am the Banker magazine's Middle East and Africa editor. And this next panel session will be looking at the potential of corporate banking in the region. It will follow the same format as this morning's session, so we will have the opportunity at the end of the panel for questions from the floor, and you can also send through your questions via the Slido app during the session. And with that, I'd just like to introduce our panel of speakers this morning. To my left is Naveed Kamal, who is the head of corporate banking for the Middle East and North Africa at Citi. In the middle is Asif Raza, who is the head of corporate banking for the Middle East, North Africa, Pakistan, Turkey, Russia, and the CIS with JP Morgan. And at the end is Dr. Yin Hong, who is deputy head of the Urban Finance Research Institute at ICBC. Thank you all for joining us today. Naveed, I thought we could start with you to, I guess, give some context to this panel and in terms of the environment that we're in today. And we have heard from some previous speakers this morning sort of around where we're at with the global economy. But in terms of the regional picture here in the GCC and the wider Middle East, over the last 18 months or so, we have seen some improved growth numbers coming from the region. And that seems to be a trend which is looking like it will continue in 2019 and beyond. But I guess the question here is, to what extent do those improved sort of big picture numbers really reflect realities on the ground for the private sector here in the region?
Yeah. Well, the quick answer, James, to this is that we haven't seen the improved numbers reflect in any material way in improvement in the private sector numbers. And there's a bit of history to this. So when in 2015, oil price tanked from $90 odd to $50 in 2015, sovereigns in the region made a conscious decision that they are not going to reduce their spend and therefore all ran deficits. And that policy continued through 16, 17. What happened in the last 12 months in 2018 was the oil price improved from an average of $52 in 2017 to about $72 in 2018. And what this improved oil price did largely was reduce the deficit, but did not increase the government spends. And that is true for across the region. And because the government spend didn't significantly increase, there wasn't any material improvement or trickle down to the private sector. Now, private sector had a change of fortune in 2015. Some of the large conglomerates, private sector, local in the region, their top line suffered 40 to 45, in some cases 50% from the highs of 2014 to say in 2018. But some of these large corporates had the financial wherewithal, had a conservative capital structure, which enabled them to navigate through this period. People or the group of companies that didn't navigate well through this period were SMEs. And almost by definition, they're small, don't have the firepower that some of the larger private sector conglomerates do. Question that we need to figure out is whether we have in the region the right ecosystem for these SMEs to negotiate down cycles. We have had down cycles before, and we'll continue to have down cycles going forward. And I believe that there is room for improvement for all countries in the region as far as creating the right balance in the ecosystem for SMEs to negotiate, work through these. Now, we've seen time and again in down cycles that large corporates, in some cases GREs, in a few cases even government departments, every time the down cycles come, they have increased their payable cycles by releasing money to suppliers, etc., on a delayed basis. And SMEs suffer. And when SMEs suffer, they don't receive the liquidity, they can't pay. And some of the legal framework that surrounds the corporate sector is, we all know about bounce checks and the consequences of that. So in summary, what happens is that SMEs can't stay back in a number of cases and fight through these cycles. And we see skips, people leave, and that does not leave a very strong impact as far as consumer confidence is concerned. We've seen immigration numbers reverse in these cycles. So I believe that there is room for improvement, and the region needs to come up with a solution and a balance which will allow it to prosper and which will allow it to compete with some of the other regions around the world.
Okay, thank you. I might circle back to that point a little bit later in the discussion. Asif, if I can turn to you now in terms of that distinction that Naveed has drawn there between the fortunes of sort of larger entities and smaller entities over the last sort of 18 months or so. I mean, do you think caution is still very much hanging over the corporate banking market today, or has it moved into a more positive territory?
James, it depends who you're asking this question. You will have two sides of the story, right? Some of the bankers will say the asset growth is not happening and the environment is somewhat light. And then you will find another side of the group will say, well, it's been a great time and lots of activity. The facts are that last year, the loan market was the all-time high in this region. There were a huge amount of activity happened. The fact is that last year, lots of hedging activity happened. The fact is, quite a lot of projects came in. So if I say from someone who is glass half full, someone who's not into the Martin's camp that would listen in the morning, I would say that there's still a lot of activities happening in the corporate side, but you will find on the top end of the corporates, Naveed is spot on the lower spectrum of the corporates, but top end of the corporate, lots of activity still happening. There's still quite a decent pipeline of financing and refinancing. Hedging was a big topic last year. Since December, when the Fed decided to put a pause on it, which in my view, this is my personal view, the interest rate has flattened. If not, the fourth quarter 2019, there could be a cut coming in. So people taking a pause on the rates hedging equation. Trade finance has done quite well. Cash management is also a big topic. Companies looking to find efficiencies, how's the best way to maximize their liquidity. And last but least, I have not seen so much ECA activities with the export credit agencies last 3-4 years in this region, and that's still, so the projects are still coming in. There is economies within GCC and the Middle East some are doing much better than others. So overall, for top end of the corporate, the activities are quite robust. Pipeline is quite big. Projects are coming in. So it's not that bad at all. No, it's pretty good.
Okay. And Dr. Yin, turning to you now, you're joining us today from Beijing, and we've heard a little bit today about sort of Chinese engagement with the region, and also I think one of the more salient aspects of the Gulf's foreign policy in the last few years has been this deeper engagement with China, which has been quite interesting to follow. And in terms of that relationship and against those deepening political and economic ties between the GCC and China. What role do you see Chinese banks playing in this regional corporate banking space?
Thank you, Mr. James. Good morning, everyone. I'm very honored to join this panel. I think as the relation develop between Sino and GCC, commercial bank would have more opportunity to provide financial products and services for GCC's corporations. For corporations, because of their obvious economic complementarity. On the perspective of the trade, China mainly import the oil, gas, and other energy commodity from GCC country, and the GCC country mainly imports the equipment, textile, and other manufactured goods from China. On the perspective of the sector corporation, as the GCC push forward the energy transportation, the energy sector has a good cooperation, bright future, because Chinese enterprises has the renewable power experience and technology. As you know, China's installed renewable power generation capacity reached to 728 kilowatts in 2018. And China is the largest solar power generation capacity in the world, and Chinese enterprises could provide the whole solar power industrials equipment. And second, I think the infrastructure has a potential market between the Sino and GCC's cooperation in the future, because of the demand is huge of the GCC for infrastructure, and China has the ability to provide the infrastructure building. And the third, I think the industry system building is a potential market opportunity. As the GCC country to help to adjust their industry structure, and China's has a sound industry system and industry chain system. So China could help the GCC country to establish their industry system. I think the opportunity of the sector cooperation between the two sides could provide the commercial bank to have opportunity to provide financial product and services for GCC's corporate. In the case of ICBC, ICBC has established 5 branches in GCC country and have increased momentum up to now, and we have could provide all around financial product and services for our clients. And the branches in GCCs could organize who our ICBC's group resources to serve the GCC's regions clients. Thank you.
Thank you, Dr. Yin. I mean, I'd like to sort of tie together some of the points that have been raised in those opening questions in terms of this sort of the regional outlook, and I guess the way that you approach the region as international banks. You know, there is a profound degree of change taking place across the GCC and the wider Middle East in terms of the reform story. And I'm talking here about, you know, this emphasis on value-added FDI, on privatization, on PPPs, and even sort of, you know, steps to address the business environment which you raised, Naveed. But in terms of that backdrop, does that sort of fundamentally change any of your sort of strategic priorities for the region over the next few years? How are you looking to engage with those opportunities across different markets and different sectors moving forward?
So, you know, regions very blessed, largely speaking, with significant number of countries with significant accumulated wealth. So there is no concern about the region from a risk perspective. Question really is how the decision makers work through various parts of the cycle. We see over the next few years an immense amount of opportunity for banks like us, but for the financial industry in general, across the region. Whether we're talking about the hydrocarbon producers or the hydrocarbon importers. Let's focus very quickly on the hydrocarbon producers. You know, what the last few years done is made all these countries run deficits, and they have financed those deficits through various instruments where banks have been involved. And we expect to see that to continue over the next 2 to 3 years. And not just borrowing money, but like you suggested, monetizing some of the assets, bringing in international partners to partner with them strategically on certain assets, and in turn invest in those partner countries and create an anchor base for their exports going forward. But for the non-hydrocarbon producers, we see some of the countries, Egypt, for example, we believe that Egypt is possibly sitting on the cusp of significant growth over the next few years. It's negotiated some difficult times, but now placed very well. Morocco looks like a very interesting market with significant upsides. So from our perspective, the region provides a very wide variety of interesting opportunities.
You know, James, let me add that whenever reforms and all this is happening, it's very exciting for the international firms, an international bank like ourselves, right? When the same old is get too boring, right? Now, so what's happening, right? So with the oil prices coming down, then lots of everyone in the region is looking to see how can I be more efficient? How can I diversify myself? So what that leads to, what Naveed mentioned, is quite a big search of monetization, privatization, right? So that is whether the assets you have, the asset you don't have, whether it's part of your core, it's not of your core, how you can diversify and grow, right? So that is where international banks comes into a picture where they can help the company to achieve that, and at the same time bring international investors who are keen to come in and using their global reach, right? So that's clearly is very, very useful and important. Secondly is that then the clients look for diversify their source of funding, right? They need to see, I need to have a stable funding and I need to have a long-term funding. And for that, am I equipped and I've been ready to attract international market? And when you do that, then the companies looking for capital advisory, rating advisory, so make them eligible to attract foreign investors. That's where then it's play in our hands of international banks to help them like we have helped many other emerging market across the world, right? Then you look into areas where then companies are looking at the debt capital market. Great news in the DCM space. If you think the Middle East has always been quite active, this year alone, just to give you some reference point, last year, at the same time this year, was a 15.4 billion worth of issuance was done in the MENA region. This year is $28 billion. Pipeline is huge, quite active. And I said earlier is that the rates are flattening out. Maybe, I could be wrong, and I'm always wrong most of the time, that fourth quarter could be a rate cut. What that means? That means more money gonna flow to emerging market, right? Egypt, Naveed talked about Egypt. I've been very bullish on Egypt, always been, and I have seen 2016 when the country floated the currency and the subsidies were taken out and IMF agreement was signed, have not. Fundamentals are always there for Egypt. Today, they are one of the fewer countries in the world in emerging market which are on the curbs of getting upgrade. There aren't too many emerging market countries who are on the upgrade. Egypt is one of them, right? They have really done phenomenal job in reforms and putting discipline, and there's a lot of interest coming in, right? Yeah. I mean, just look at the announcement a couple of weeks ago, the KKR and BlackRock, huge investment, huge announcement. I mean, that's what the money's going to flow here.
Okay, we're running quite short on time, so just a final question before we turn to the audience, just around the role that technology is playing in reshaping sort of the corporate banking sector. In particular, the question I have here is sort of, are customers becoming more demanding in terms of their sort of need to engage with technology? Looking at things like cash management and liquidity solutions, is that now a feature of your world, and how do you address that?
Yeah, it's here to stay. Technology has evolved. Digital disruption we're in the midst of it. Big data, robotics, artificial intelligence, all is being implemented. How we interact with clients has significantly changed. Clients are in need of big data. Clients are in need of analytics. And the banks and institutions that evolve with time and embrace the technology are going to be ready for the next phase. How organizations and banks organize themselves has also changed. Say 10 years ago, the chief technology officer, the chief digital officer at our customers weren't really a major contact point for us, but now they're an essential contact point. Technology has enabled banks to understand better where the buying centers are, what their requirements are. So it's just a fascinating world. Asif's area of expertise, so I let Asif talk more.
I tell you, until 3 years ago, my son was not interested in me, what I do. Today, I'm a cool dad. Because he hear in the conference calls, I use of blockchain and other those terminologies, suddenly he's getting interested in the banking as such. I think the technology, I think Naveed is right. We in the firm always talk about this thing is that the biggest disruption is in the payment space, right? And it's a good news, and I think it's also very important to say that corporate and the corporate bankers and corporate, they want to have the same experience that you and I are having today in the retail space, right? Ease of doing business, right? Today, you do 2 buttons and then you transfer the money, or you collect the money, or you do things of your banking, right? Is that the same in the corporate world? No, not today. So the corporate world wants to have the same experience. So that's where technology is going to make a big difference. Again, the treasurers of a corporates, before, their activity was managing risk, managing liquidity. But now with data, they have so much accessibility of information that they can make decisions around, is my supply arrangement is correct or not? Am I paying less or higher? What's happening? So that data availability is also changing the role of many of the executives in the firm, and that putting pressure on the banks to come up with those solutions have not. So technology is playing a bigger role. Payments is the most disruptive business. Give you an analog example, right? We, one of the biggest payment providers as a firm, our market share, we are the largest one in the world, our market share in the payment space is 3.7%. That gives you example how fragmented this industry is. So the banks has a golden opportunity, especially for the corporate guys, has a golden opportunity to make it easy of doing business for the corporate world, which will help them to do things they haven't never done it. In the UAE world, consolidation, and also in the Middle East, banking consolidation is happening, right? So what that means, I mean, there are many examples. I lived through 6 mergers myself. There are many benefits will come in, but one of the things is that with the banks getting bigger, they will be able to invest in technology. They will have the capital to invest technology, right? So all of this thing, corporate bankers' world is changing because the client have now the information, accessibility to do many different things, and they will require banks to really adopt and make it easy and allow them to do more.
Okay. Well, thank you. We'll just quickly have time now, just a minute or two of as audience questions. Unfortunately, I can't turn to the floor, and I apologize for that, but I will take some questions off the Slido app here. The first one and the most voted comment or question is from Sonia Jawani, who actually had a question, I think, based on your answer initially, Naveed, in terms of the SME space and the incentives around governments boosting SMEs in the GCC, especially in the UAE. I mean, this has been a big topic for a number of years, and obviously, you know, it's at the heart of sort of the economy here in the region. Are governments doing enough? Is the direction of travel positive for you?
So based on my interaction with government seniors in the region, but particularly in UAE, there is an immense recognition of significance of the SME sector. And large part of our discussions have been around what needs to be done more to improve life for SMEs. You know, more efficient payment mechanisms is clearly one. You know, reduce the time within which SMEs receive money. So there is a recognition. I believe there's still room for improvement, something I alluded to earlier, and I think it's largely around the legal framework. I think that will create more sustainability and more permanence to the expatriate businessmen who come here to set up businesses and trade. And I think that sustainability and permanence is important.
Okay. Asif, just a quick question for you in terms of Turkey. We heard from Martin Wolf this morning that obviously developments in Turkey haven't necessarily been too positive over the last decades, but one audience member wants to ask you, in terms of your business, how upbeat are you on Turkey's prospects moving forward?
On Turkey?
Yes.
I mean, there's a lot of headwinds coming in Turkey. They have a big economy. I think there are 2 key things that investors are cautious about. One is that the May election, how the election in May is going to evolve to, and how that will shape, if any. Second thing is that Turkey is always dependent on external debt, right? And there's a huge amount of external debt. And so there is a risk of whether they will be able to refinance or not. Having said that, until March 12 we are in today, they have printed 5-6 DCM, including 2 treasury, and those have been very successful. So investors are there coming in. But I think 2 landmarks to check is, one is that election. The second one is that after the election, see how Turkey is still vibrant to get refinance the debt they have. Currency is somewhat now has been for the last 4 to 5 months has been stable, but it's quite a bit of headwinds. But big economy, but we have to wait and see. So quite a few people are on the same cap. On there, I'll be more on the Martin's cap. That's probably the only space there. But this year has been good for, they were able to print quite a bit of paper. There's quite a bit of investor appetite coming in.
And Dr. Yin, I'll just give you the final word for the panel. A lot of your research is centered on ideas around sustainability in banking, and I'm just keen to get your view on really how sustainability can best be integrated into sort of corporate banking and what that future looks like to you.
Thank you. I think sustainability should be a business strategy of commercial bank and deeply integrated their product and business line. And the first, banks should take consideration to sustainable factor during investor and financing. Bank not only take account of the corporate payability and credit rating, but also take account their environmental, social, and governance performance. And I think commercial bank should integrate the ESG rating into their financial and credit making process. In order to commercial bank could select their better ESG performance clients to support this kind of the clients to have a good development. The result is through the for financial institutions beverage tours to support the economic develop to the direction of low carbon and green development. And the second, commercial bank to fuel more and more the sustainable market is a huge future. For example, the renewable energy sectors is a big market potential, and the environment protect pollution reduction. For example, in China, the pollution air we have to face. Some days we have to breathe some dirty air, and the people hope to have clean water, clean air, and healthy food. And so this area on the other hand has a big opportunity. So we think commercial bank should take account and to do more research to the sustainable market. And the third, I think the commercial bank should pay more attention on the risk of the environmental risk. The risk comes from the two aspects. One is the physical risk, and the other is the transformation risk. The physical risk is, for example, the flood, the physical disaster, and the financial institution maybe have to face the acid disasters, and the value will be reduction. And the other is the transformation risk. For example, as the energy transformation, maybe some oil company have to face the risk as the transformation risk, because even if this kind of the oil or fossil fuels company, they hold a bond of the oil resources, but maybe the renewable energy could instead of the fossil fuel energy. So this is a risk if a financial institution hold a more percentage fossil fuel related asset.
Okay, well, Dr.
Thank you.
Thank you very much, and thank you very much to the panel for being here today. I apologize we couldn't take questions from the floor, but we did run out of time in the end, so thank you once again.
Thank
you.
Thank you.